Hey everyone. Picture this, it's January 2026. You open your phone from anywhere in the world, and with just $300, you snag a slice of a high-yield commercial building in Dubai, a rental home in a hot US market, or even luxury apartments in London. Every single month, your crypto wallet gets automatic rental payouts in stablecoins, no banks dragging their feet, no endless paperwork, no wait for the check to clear. This isn't some far-off future dream. This is real estate tokenization, or RWA, real-world assets, and it's exploding right now in 2026. Today we're going full deep dive, what it actually is, why this year is the massive breakout moment, who's already cashing in real yields, the best platforms to jump on today, the honest risks you need to know, and where this heads in the next few years. If you stick till the end, hit the comments. What type of property would you tokenize first? Residential, commercial, resort? Let's roll. Let's break it down simply. Classic real estate investing, you need serious cash, think $50,000 to $500,000 plus minimum for anything decent. Then come agents, lawyers, inspections, closing delays that drag on for months, and selling. Good luck, high fees, long market times, illiquidity. Tokenization changes the game completely. Take a real property, a $10 million office tower or apartment block. It gets professionally valued. Then it's divided into millions, or billions, of digital tokens on blockchain, Ethereum, Polygon, Hedera, XRP Ledger, Algorand, you name it. Each token represents a tiny fraction of ownership or a direct claim on rental income. By $500 worth, you own a piece, maybe 0.005%, and get your proportional share of rent every month via smart contract, paid out automatically in USDC or similar, straight to your wallet. Need to exit? Sell those tokens on a secondary marketplace, often in minutes, 24/7 trading, way more liquid than traditional property. It's basically turning bricks and mortar into tradable, fractional digital assets, like stocks, but backed by actual rent checks and property value. Everything lined up perfectly in 2025 to 2026. First, the big institutions jumped in hard. BlackRock, the $10+ trillion giant, highlighted tokenization and crypto as major themes driving markets in 2026 in their latest outlook. They're pushing tokenized funds, like BUIDL, and see Ethereum capturing most of the growth in tokenized assets. Franklin Templeton, JP Morgan, Goldman Sachs, all deep in experiments. Analysts from A16Z to Coinbase Ventures rank RWA tokenization as a top trend. Second, the numbers are insane. Tokenized real estate sat around $3 to $10 billion in 2025, reports vary, Insight $3.7 billion, others higher for RWAs. In 2026, projections jump to tens of billions, some say $20-50 billion plus trajectory, with broader asset tokenization hitting $3 trillion, Morder Intelligence, or even $2 trillion plus already in RWAs per some views. Long term? Deloitte eyes for $1 trillion in tokenized real estate by 2035, others forecast hundreds of billions by late 2020s. CAGR anywhere from 20 to 50%, it's exponential. Third, tech and rules caught up. Compliant chains with built-in KYC AML. Clearer regs in the US, SEC frameworks, EU, MiCA, UAE, VARA-licensed platforms, Singapore. This makes it safe for everyday investors and institutions alike. Fourth, actual money is flowing. Real yields, real payouts, not just promises. Here's what's actually working and paying out. Realty, the OG for fractional US rentals. Hundreds of single-family homes tokenized, mostly in strong rental markets. Over 16,000 investors worldwide. Start at $50. Daily stablecoin payouts, yields often 9-12% plus. By 2026, they've tokenized well over $150 million, and it keeps growing. Zonix, institutional heavyweight. partnered for $100 million plus in compliant commercial real estate on Hedera and XRP Ledger. AA-powered compliance, ESG focus, global fractional access. They're scaling fast in 2026, targeting big chunks of the commercial market. Lofty, on Algorand, super accessible. $50 minimum for US rental properties. Daily yields, instant liquidity, even governance voting. 150 plus properties tokenized, $50 million plus value by late 2025, pushing higher this year. PRYPCO Mint, UAE Dubai are licensed by VARA. Fractional ownership from $550, AED 2000. Focus on Dubai's booming market, high net yields, tradable tokens. They're expanding regionally and raising millions quickly. Others worth watching: Honeybricks, yield-focused funds, Propi, blockchain property closings plus tokens, T0, regulated secondary trading, StegX, partnered with Zonix for big institutional plays. Luxury examples? Portions of iconic hotels like St. Regis Aspen have been tokenized and traded. These platforms aren't experiments, investors get monthly income, and volumes are climbing. Pros are clear. Low entry, $50 to $500 gets you in. Automatic passive income in stablecoins. Global diversification, Dubai offices, US homes, European logistics, all from one app. Way better liquidity, sell fast versus months, years. Full transparency on blockchain. But risks are real, face them head on. Regulation varies widely, some places are grey or evolving. Smart contract bugs or hacks can wipe value, though audited ones are safer. Property risk stay, market drops, vacancies, maintenance issues hit yields. Secondary markets can be thin on some tokens, discounts possible. Taxes? Complicated, often treated as securities income, capital gains, or property, check your country. Experts see tokenization becoming everyday in 3 to 5 years. Entry drops to $10 to $50. Huge variety, from data centers and solar farms to prime commercial spaces. DeFi mashups use tokenized property as collateral for loans. Institutions pour in trillions as regs solidify. This doesn't kill traditional real estate, it supercharges it. Makes the market accessible, faster, and truly global, like how ETFs democratized stocks. Quick question for you right now: if you could grab a $200 to $500 token share tomorrow in a real income property yielding 8–12% plus, would you pull the trigger? Or are you still in that sounds too good, probably a trap camp? Drop in the comments. First property type you'd go for? Residential rentals, commercial offices, resorts, warehouses. Starting investment, $100, $500, $1,000. Upcoming videos. Top 8 to 10 live platforms in 2026, step-by-step how to start. Red flags to avoid scams. Tax tips for major countries. Head-to-head versus rights, crowdfunding, classic rentals. Subscribe and turn on notifications if you want to ride this wave early, it's accelerating fast. Thanks for listening all the way through. Catch you in the next one. Rock it!